Will we see a Federal Reserve pivot soon? Well, that is what Fed Chair Jerome Powell said at the Jackson Hole Symposium. Powell said that the moment has come for the central bank to cut its main policy rate. His speech on Friday confirmed predictions that the Fed will start rate cuts next month and prevent further cooling in the labor market. Additionally, the Fed chief said that the inflation, it's been moderating towards central bank's target.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Powell's comments helped put the market's immediate concerns to rest. However, his statement did not reveal much about the Fed's plans beyond its September meeting. The Fed has been fighting inflation for 2 years, and the speech proved it is about to reach a tipping point. Through that period, the labor market maintained an unexpectedly strong performance that allowed policymakers to relentlessly pursue their goal of bridging inflation down to target. Powell acknowledged recent progress on inflation, and this is what he said.
My confidence has grown that inflation is on a sustainable path back to 2%.
All right, for more on this, we are now being joined by Mithali Nikor, economist and founder of Nikor Associates, live from Delhi. Good morning, Mithali. Lovely to have you back on the show with us.
Good morning. Good morning. Good to be here. Thank you so much for having me.
Right, Mithali. Now that Powell has made it clear that there will be a pivot, will the Fed look at an aggressive rate cut path, or will it consider a more moderate path?
So, at this point in time, what we've been expecting, and I think we've been tracking this on WION for the last, 3 months, we've been talking about different statements from the Fed. I think it's very clear that a 0.25% rate cut is the most likely. This is the path that, the central bank has been on. The Federal Reserve has maintained a very predictable stand, and it has been shaping market expectations for the last 3 months. In statement after statement, they've been very consistent in terms of, the signals that they need for going for a rate cut. And then they've also been very consistent in making it clear that they are looking at a 0.25% rate cut. They're not going for an aggressive policy, but they want to see how the markets react, how inflationary pressures react to a small rate cut.
Right. Now, also, what is your take on the timing of the Fed's pivot to easing away from aggressive tightening policy? Late, just about right, early? What's your assessment?
So, this is very interesting because at the end of the day, the way the Fed has shaped market expectations, all of us were expecting the rate cuts to come in September. And that's very interesting because in July, they issued statements saying, we're going to do rate cuts in September. Now, again, we see this conference happening, Jackson Hole. And again, we're seeing the Fed continuing to shape the market expectations about rate cuts in September. So they've got this very clear, credible path going. And this is very important for any market economy, that investors and financiers and entrepreneurs should all have that confidence in the central bank that when they announce something, they're going to actually follow through on it. And this is exactly how the Fed, with its market setting expectations, has been proceeding. And it has brought in more stability into the US economy.
Right. And of course, as always, I do have to end with a question that requires some sort of premonition on your part. Will we get a 25 basis points cut or a 50 basis points cut in September?
So I am expecting a 25 basis points cut, not a 50 basis points cut, simply because of the nature and tone of the announcements that have been coming from the Fed, which have been very clear in that, expected to be not a very aggressive rate cut. This is expected to be the first rate cut in the last 2 years. And it is, of course, going to be a little bit dependent on the data that's coming in, on the trajectory that inflation is taking, and also on the jobs data, because that is the most important thing the Fed is concerned about at the moment, that, there should be a job generating kind of policy announcement that's made. When you have a rate cut at the end of the day, you're going to try and ease borrowing situations for the government. It's also easier for, the government to borrow from the Fed in order to finance some of its programs. And that is what we expect can happen after the November election. So I think the Fed is also laying the groundwork for some amount of accommodative monetary policy for the fiscal policy to then come in and focus on job creation.
All right. Well, Mital, thank you so much for joining us on WION with your insights on this. Thank you so much for your time.
Thank you.
For latest news, download the WION app and subscribe to our YouTube channel.